We're basically a mid-size agency, and we do everything from employee benefits, which is about 65% of our overall book of business, and then all the property and casualty lines, all the lines, bonds, the general property casualty lines, sexual abuse, the errors and omissions, the directors and officers. Workers' comp is our single largest line, probably followed by the directors and officers. Workers' comp in general, there really are not separate classifications for most workers' comp type exposures. Like by far the largest payroll areas that we see across the board are going to be what they classify a lot of people in outside sales and the clerical. And then there's now the newer telecommuting remote classification. So those are the three largest. Now the outside salesperson is where they stick a bunch of consulting type positions. So if your role in a nonprofit organization is out and about in the community and it doesn't better fit in any other category, you kind of end up lumped into that outside sales. There really isn't a more specific one. So if you're doing advocacy or you're out in the community a lot, you get put out into that classification. Inside clerical really gets reserved for people who are not leaving the office and are pushing paper or documents or not working with the public, so to speak. And then there's the other more specific classifications that we'll see. But like a school classification, there really isn't that much difference in the way they classify that versus a public school, a private school, or any other school. That also ends up being one of the classifications we see a lot. Education that has to happen from our part has to do around the rules on who can be excluded and included in the payroll for workers' comp. And this kind of delves into, and the majority of the questions that we get have to do with independent contractors. So you didn't specifically spell that out in the questions that you sent to me, but I know that's one of the big challenges has been around independent contractors, because California's law is well defined. And I think we're going to start to see the federal laws start to follow that. But with regards to California, if they're in the operations of your business and they're not running a whole separate business that's insured and all of that, you have to include them as payroll on yours. And then you run into some, depending on the position, some minimal payroll classifications that have to be applied to that position. One example that we see a lot of, and it has to do with some of the more youth serving organizations, is some of these after school programs will bring in tutors or run an art class or something along those lines. And if you are not verifying their insurance and getting them and having proof that they have workers' comp insurance, you're going to probably end up paying for them under workers' comp. And that's where I think we see a lot of disagreements with audits or payroll reporting. So some carriers will allow you to include volunteers on work comp, and that's when you will have minimum payroll applied to those positions. Your option for that is to cover them under an accident policy. It isn't as comprehensive. It isn't going to replace salary, but it is going to give you some protection and specifically protect the general liability against lots of small little medical payment claims, because technically volunteers are not excluded from making a medical payment claim under your general liability policy. But if you get even a couple of those, you risk the policy not being renewed from the carrier. And it really is a much more comprehensive way to cover them. If something serious were to happen, you still could be sued, like a negligence. Like, I'll just give an example. We had a wild wildlife rescue organization, and one of the other volunteers left a hose across a pathway, and the volunteer tripped over the hose when they were carrying some buckets and had a pretty serious break in her leg. She was an elderly person. She didn't have any other job. They had an accident policy and it ended up covering, I don't remember, 50,000 was the limit they'd purchased of that. She still got some medical payments under the policy, but then she turned around and sued the organization for the negligence of the hose being there because her medical bills were much higher um, than that. Now, if that was an employee, it would have been covered by workers' comp and all those medicals would have been covered. So it does get a little trickier when you're trying to protect your volunteers. But one of the least expensive ways to do that is through accident insurance. And when you buy accident insurance, you can buy levels. So you can buy participants. So the people taking your program or participating in your program, you can do just volunteer accident. You can do both. So there's options there with regards to accident, but that is one way. And you can buy different dollar amounts of coverage on that accident policy. But I mean, I think the minimum premiums, depending on how many volunteers you have, the minimum premium is usually around $100 on the accident policy. So it's really much more worth it to put it there. Covering them under work comp because of those minimum payrolls, it can get very expensive. And not all work comp carriers will cover volunteers. And you don't have a choice to say, I want to cover those two volunteers, but not those two. You have to cover all of them. The fee you pay them would get lumped into your payroll if they're not separately individually insured. So, and then if they are separately, like they have their own, let's say you're contracting with an organization and they have their own workers' comp and you have proof of that, so then you wouldn't be paying for it. But if they don't have that, you may end up, if it's a classification that you don't have on your regular payroll, you could end up with a minimum on that classification. If they're an individual, they may not have workers' comp insurance. So should address whether they're actually independent contractors or whether if they fall into the classifications, the state changed the definition of an independent contractor. Let's say I provided IT out of my home and that's what I did was IT support. And I'm going to work 10 hours a week for your organization. You may
Mhm.
want to contract and pay me as a part-time employee rather than as an independent 1099 contractor. Then you're
I
not going to have the
see.
issue with minimums because it's a straight payroll. I'm your employee. And I know some nonprofits did move to that. They're making them part-time, occasional or part-time temporary employees if it's for a certain event or what have you. Because that definition, and I don't have it right in front of me right now, but basically it says if it's in your operations, they are going to consider them your employee unless they have their own separate. Like if you're contracting with, say, an HR service or something like that, that's pretty defined. It's an organization, it's a service. They have their. But if you're doing it with an individual, you may have to look at the fact that maybe it would be better you pay them the same amount, but you're paying them on a payroll basis versus a 1099 basis. That specifically, that type of insurance is probably harder to get. So it might be advisable, unless they're volunteering their time, it might be advisable to pay them on basically into your payroll for however many hours they're providing time to you. I know that's a whole separate administrative burden under payroll because now you've got to do taxes and you've got to do all of that. However,
Mhm.
it's a lot easier than arguing sometimes about it. Board members, this also was a change a few years back on the work comp law, but basically they changed the definition of who can be excluded as an owner. And I have to tell you, it is really, I'm having this discussion with state fund right now on the way they make us fill in applications for nonprofits because it's not right. So when you have a nonprofit, you are not owned by an individual. The law allows individual owners over a certain percentage to exclude themselves from work comp coverage. You can't exclude anybody on a work comp policy for a nonprofit because nobody is a owner over that 50% or whatever the percentage is. I don't really remember exactly the specifics of the percentage because we don't insure for-profit entities. So it isn't something we need to stay on top of. But board members, unless it's a reimbursement of expenses and a nominal, I believe is the wording they use, stipend, which most nonprofits, to my knowledge, don't. Most of the ones that we work with don't pay the stipend to their board members, so it isn't an issue. But the application process makes us say we want to exclude these board members from work comp. Well, they're not included. They're not included unless you're paying them payroll. So how can you exclude them if they're not included? And so depending on who your broker is, you may need to have a discussion around that because a lot of them fill out the applications to exclude your board members, but they're not technically excluded because they cannot be included unless they're receiving payroll or you have volunteer coverage on your policy. Then you would have some minimum payroll amounts on those that have to be applied to those board members. In most cases, the board members, if they're volunteer board, they're not covered by your workers' comp insurance because they're not employees. They can be covered as your volunteer accident policy for anything that would happen in connection with that. And reimbursing them mileage and expenses and paying expenses for in-person board meetings, that is all not considered payroll. That they still would maintain that status as a non-employee through those, having those expenses covered. That isn't an issue. If you don't have a broker who really understands that, your application could get wonky when they're filling it out with your carriers, and they may answer those questions in a way that says, oh, we want to exclude our board members. Well, they can't be excluded if they're not able to be included. So that's often misunderstood in my experience with those applications. And the discussion I've been having with State Fund is around their online application, which the broker has to fill out. They make you list, basically you have to have a secretary, a chairperson, and a treasurer positions minimally to move forward in an application process. And they don't, you have to then say exclude or include and put a percentage of ownership for those positions. They're volunteers. They don't have any ownership and they can't be excluded or included. And that's my beef with the application process. And they've moved almost all the carriers have moved to separate online applications. And so depending, it could be filled out differently. And then that's what prints on your policy. So your work comp policy is going to list those positions as excluded under. That's what I see a lot when we do policy reviews from other brokers, is they're listing them as excluded. When we do our applications, we make them make it right and not list those people as excluded or included because they're not being paid. So they're neither. We try to work with the underwriter so the policy doesn't come out with these officers listed as excluded on the policy itself. I will say for most of our carriers, that's very, they know because they insure a lot of nonprofits, but they get a new underwriter in and we have to go through the whole rigmarole every single time they get a new underwriter in. And that also depends on their online application and that we have to fill out on the broker side and whether that correctly states that process. So when the law changed, we write a lot of business with State Fund, and we write a lot of business with a lot of work comp carriers, but we write a lot of business with State Fund. We're the only broker they deal a lot with that has a lot of nonprofits. And so when the law first changed, we were still using, the standard Accord paper applications, and they didn't have an online portal that you had to go take everything off that application and put it on in their website. And we got our whole underwriting team there to really understand you can't exclude these people because they're not even included because they're not paid. And then kind of the light bulb went off. And then now their new portal that they've just come out with to put their applications in, we're kind of backtracking a little bit and I'm having to go to the higher ups in the underwriting department and say, you have to fix this because you're forcing us to basically put in, we can't move on and get a price unless we say, here's the officers and we want them excluded. And that's wrong.
I feel like we were talking about this last time, that insurance companies don't understand the nuances of nonprofits, and clearly you do. And clearly you're in that pivotal role where you can advocate. And you know what to advocate for, furthermore. Is there anything else you want to share?
I mean, I'm always happy to talk. Feel free to reach out anytime.